Good morning. Excellent.
Good
Another
morning.
beautiful fall day here in central New Mexico, and thrilled to be here.
So excited to talk real estate again. It's
I
our
know.
favorite.
Favorite
Tego.
time.
So Tego, I know that you have been doing a lot of looking at the data. What are we going to be talking about today?
Sure. So we have a whole list of things I want to cover, and a lot of news in the real estate world. And of course, I'm very in tune to it, as they say, right? It's that reticular activated system, right? I always see things that are related to real estate, but the mortgage market has been wild. I wrote down in my notes here that it's been a crazed mortgage market, so we're going to talk about that a little bit. And actually, there's really good news there. Also, cross market demand and how. What cities look at Albuquerque, and where do people look in Albuquerque?
Where are they coming from?
Right.
When they're looking at homes in Albuquerque,
Right.
Because there's metrics that show where people are at when they're on their computer searching homes in Albuquerque.
Well,
so that'll be interesting.
And I have some more data on that you don't even know about.
Of course.
That I'm gonna surprise
Look how
you with.
excited you are to have more data.
I know more data.
So,
Tracy, we got to talk. I mean, we've talked about it now. I think the last 4 weeks is the New Mexico Mortgage Finance Authority Targeted Areas Program. But we really need to talk about it. It's just an amazing program that kind of has a short lifespan on it to really get the biggest benefits from it, right? So let's start right there. And first off, we're the Venturi Realty Group, Keller Williams Realty here in Albuquerque, New Mexico, serving all of central New Mexico. And you can reach us at our office line at 505-448-8888. We call it our hotline, but
448-8888.
Exactly.
Very easy. Or welcomehome.abq.com, our website.
Great.
Obviously, Tego's on Twitter. Lots of ways to find us. I'm on Twitter sometimes.
Maybe
Instagram,
maybe
YouTube.
Just a little too much on Twitter, but
Yeah.
hey, we all have our addictions, right? Okay, Tracy.
That doesn't make it okay if you acknowledge it, Tego.
That I get it.
So
I get it.
Targeted areas for the New Mexico Finance Authority homes that qualify for an interest rate, Tego, that would be the lowest rate that the MFA has offered in the past 12 months. I looked it up. It's like 3.5.
Yeah.
Because we can go back 12 months ago before the rates jumped up, and that's what they're offering right now. This is very limited time, though, because it's a rolling 12 months. So every month that goes by, if you don't take advantage of this targeted home buying process, your interest rate's going to go up like it did in the past 12 months.
And so what we did is we created a website. We're just so excited about this program because it's such a good program. And the reality is that we're not talking high dollar homes here for the most part, right?
They're in economically disadvantaged neighborhoods where they're trying to regenerate, have people buy homes there and start families, whatever.
And that's one of the reasons we're excited about it, because it's a way to help out some of those neighborhoods.
And it is not just for first time buyers, and it can be for as little as $500 out of pocket. And it's got to be a primary residence. You can't go buy properties for rentals or anything like that, or for flip. It needs to be for a primary residence. But who do you know that could take advantage of this right now? And so the best thing to do is get on the website Targeted Areas NM.
Yeah, Targeted Areas
NM.com. And it shows the map. These homes are all over the state, so you don't have to be looking just in Albuquerque. If you're thinking of Edgewood or Raton or somewhere else, Vegeta, Belen, it shows everything in the state, plus the areas in the Albuquerque metro.
Actually, no, I got to correct you.
Oh, right.
I know. I can't doing this live. It's correcting Tracy. But no, it's just
your map is just central New Mexico right now.
Yeah, it's just a greater Albuquerque area, but it
there
does
are
go
areas all over the state. Are those on MFA's website? Or?
Yeah, there is. If you go to our website again, targetedareasnm.com, I've got the link there to the Mortgage Finance Authority's website to talk about the program and how it works.
Sure. So great program. If you know somebody, yes, you cannot make over a certain dollar amount a year to qualify to buy a home with this great interest rate. However, it's a higher limit than the regular MFA program, and the home prices can be higher also than what the regular first-time home buyer program allows.
The New Mexico Mortgage Finance Authority programs are really, really good programs. And, there's so much discussion out there these days about housing affordability and, first-time home buyers and, challenges. We are really lucky to have this program. It's a great program, and first-time home buyers should be looking into it for sure.
Moving on.
Yes.
It's been a big week.
Oh my gosh.
In interest rates, the stock market, the crypto market, but we want to focus on the stock market, not the stock market, the interest rates.
Interest rates, mortgage rates, which really focuses on the bond market, because that's where pricing for the cost of mortgages gets set, is in the bond market. And what happened with the decrease in the inflation on Thursday, the announcement made everybody feel like, oh my gosh, here we go. We've hit top inflation. We're starting to back up. And what happened is it really helped the bond market, and mortgage-backed securities prices dropped a lot, which is good news for mortgages. There was a 0.6 or 60 bips, as they say, decrease in mortgages on Thursday. So it went from over 7 to, so it was like 7, I think we said, but like 7.2 is kind of what we were seeing as kind of and that's
percent
average
interest rate for mortgages
down to 6.6.
Right.
So
very significant.
Pretty significant. That 7% mortgage, even mortgages in the 6 are definitely affecting people's ability to purchase. So
we expect that the mortgage rates are going to continue to bounce up and down.
Yes.
But there are some programs out there right now if you're thinking of buying, and a lot of people are. We're still seeing a lot of foot traffic. If you're thinking of buying, there are some lenders who offer a lock in your rate before you find a house.
Yeah.
So if you need to lock in the rate, a lot of times they also offer a one-time float down. So if you lock it in today, where we're saying it's 6.62 for good credit, and you find a house 2 weeks from now, get it under contract, and if the rates are actually lower than that, the one-time float down means then they'll reduce it to that new lower level. But if they go up, you're locked in at that current rate. So that's an option. There's a lot of other programs that lenders have, so we can certainly connect you based on your circumstances with the right lender. Cross market demand.
Yeah. Let's talk about cross market demand. So there's some great reports out there. One of them, this one we get from Realtor.com, and it is what it does is it measures where people are when they're online looking at homes for sale and where they're looking. So what they're able to do is track, what areas are looking at your area, in our case, Metro Albuquerque, right? And so if you go down the list, this is Q3 data. So this is, July through September, right?
Do you think everybody's guessing right now where most people out of our area looking online thinking about Albuquerque homes for sale?
Yeah. You would think, and it's interesting because I've watched this shift around over the years for sure.
Mm-hmm.
And it's interesting what's number one right now.
It really is. I'm looking at the graph you just pulled up.
And so number one is Metro Phoenix, Scottsdale, Mesa.
23% of the statistics that say that people are looking there at our market for homes, which is really interesting. I would have thought it's kind of the time of year where the snowbirds are thinking about, oh no, winter's coming. I need to go south.
Yep.
And maybe instead of Phoenix, they'd be thinking of Albuquerque, or instead of Florida with all the hurricanes they've been having.
Well, Chicago, Metro Chicago is on the list. So we've got Phoenix, Los Angeles is number 2, which is Los Angeles is kind of always on the list as people looking at the Albuquerque area for a home purchase. Denver, that's usually on the list. But like Washington D.C., Arlington,
That's number 4.
that's number 4, and I haven't seen that on the
I
list
think
before.
New Jersey was up there one year. The New
Yeah,
York, New Jersey
yeah,
area, New
yep.
York City, New Jersey
During the
area.
pandemic, it was a lot.
It was a lot of that
from New York, Jersey, that metro.
So number
New York
5,
area. Dallas Fort Worth, that one is on the list a lot, and that's not uncommon to see a lot of people interested in Albuquerque from the Dallas area. And then Tucson, which I found interesting. I was kind of surprised to see that, because I always
Number
think
8.
of Tucson and Albuquerque,
As
kind
being
of in the
similar.
same light in a lot of ways.
So over Las Vegas is number 7.
Yep.
Then Tucson, then Santa Fe, looking at Albuquerque. Interesting.
Yep.
And number 10, to round it out, is the Newark, New Jersey area. So that New York City hub. So they're still on the list. I just hadn't looked far enough ahead. So number 10.
Yeah. So if you look at where people are looking from Albuquerque to other areas, you want to take a guess at what the most popular is?
No, I
Okay.
can't even imagine.
Well, it's actually Dallas. So, it's interesting, and that's to other states. Now, Santa Fe is number 1, and Las Cruces from Albuquerque. But, out of state, it's Dallas, Phoenix, Denver. So it's very interesting. It's kind of
Very
like
metro.
the same metros. But the thing that's interesting, the question always comes up is like, okay, is there more people coming, or are there more people leaving? And one way to track that is you look at the U-Haul and what they're charging people to rent a truck. And so
Where the trucks end up.
So I did a little analysis, and Phoenix to Albuquerque from Phoenix is about twice as expensive as from Albuquerque to Phoenix, which means there's a much there's a lot of demand of people coming here, and there's not a lot of demand people wanting to go to Phoenix. It's interesting. And that you can do that, but it was the same for Tucson as well. It was almost twice as much to rent a truck
from Tucson to
Albuquerque versus Albuquerque. And I found it pretty much across the board. Every metro coming to Albuquerque was more expensive than leaving, which means
the trucks are empty here.
Yeah. So
that means there's more trucks available here for people to rent, to take to other areas.
Right.
Same like the trucking industry that are supplying all the shops and restaurants around the world, right? A lot of those trucks, they say they don't really like the Albuquerque route because they call it a deadhead. There's not a lot of product in Albuquerque going out again. So when they get a load to drop off in Albuquerque, they typically have to go somewhere else to get a full trailer again.
Yeah. Yeah. And that's a whole different conversation, but because we don't have a lot of manufacturing here. But
that's why the U-Haul makes sense.
Yeah.
To correlate it.
It does, on this little, analysis, which, is hard to tell. It does seem like there is more demand for Albuquerque than some other markets.
I just want to go to number 4 out of state is Durango, Colorado. So
people going that are looking, that live in
Albuquerque looking at Durango,
in other markets,
which is, interesting. It's a very easy second home market for people here, which
not a cheap second home market, but a very,
it's beautiful.
But
place, if you're thinking of getting a place in Durango, we have some great realtor partners up there. Just give us a ring and we can connect you.
Yeah. So anyway, I find that cross market thing kind of interesting. Is something that we always watch as real estate marketers. We want to know what markets are hot for us, right? So, so Tracy, the National Association of Realtors, our national association, they do a survey every year, which really gives us some really interesting insight into behavior and what people are doing when they're buying and selling, and what they're thinking and how they feel about it. Really in-depth report. It's like 140 pages of charts, but there were a couple takeaways that really jumped out at me, Tracy, and I just thought they were pretty interesting and wanted to share. So this first one here.
First one is, I haven't looked at this report, but it's sad and true.
Yep.
First-time buyers dropped to an all-time low of 26% from 34% just a year ago. So first-time buyers, prices have gone up. The affordability issue is real.
Yep.
Less first-time buyers able to buy a house right now.
Yeah, and it's really unfortunate.
Which
and
goes back to our targeted areas. There's a
Yeah.
lot of opportunity there.
Yeah, there
for
are
first-time buyers.
there are programs out there. If you're a first-time buyer or know somebody that really wants to buy and they don't even know where to go and don't know what options they have them reach out to us. I mean, we're teachers, right? First and foremost, and we're the Venturi Realty Group with Keller Williams Realty, 505-448-8888. I just wanted to put that out there. Yeah.
So the age of first-time and repeat buyers hit an all-time high.
Yep.
So the age of the first-time buyers jumped to 36 years old from 33 years. That's a pretty significant jump.
That's an all-time high as far as they've been tracking this all the way back to the 80s.
Right, and it hit for 3 years running. So
Yeah.
a big jump. There's some serious headwinds for first-time buyers, and that's part of it, right?
Yeah.
That group is among. It's not just first time, but they're among that group of move up or change houses.
Repeat buyers is now 59, the median age of repeat buyer. That's us, Tracy.
Repeat, yeah.
Some of us are still in our 50s.
Median age. Well, some of us are not.
You're really close, though.
Yeah, I'm already past my 50s.
I can't believe I just did that to you.
Yeah.
I know, sorry. Actually, I can't believe I did it.
What about small towns and rural areas?
Yeah, some really interesting shifts in that. Not a real, excuse me, not a big surprise from
pandemic
because
days.
of the pandemic, right? And the work from home. And so, it was like 20% of purchasers in 2021 and 2020 were small towns. It jumped up to 9% for 2022, which interesting. And then the number of urban suburban shrunk from 50% to about 40%. So, I mean, it's kind of shifting around and where people live. Yeah.
So small towns and rural areas proved to be the winning dynamic for many when making that choice. Affordability was key, and family support systems were just down the street typically. So a lot of people that had moved to the big city still had family maybe in smaller towns, and they were moving back because they could work from anywhere or have changed their lifestyle, right?
Yeah. So this one, Tracy, was the big shocker in this report. And what they track is how far a buyer moved when they basically moved away. And it had been steady for years around 10 to 15 miles. Basically
when people moved, they stayed in the same school districts, the same shops and restaurants, the areas that they knew, right? 10 to 15 miles.
Yep. And so this jumped from 15% in the 21 survey. For the 22 survey, it's now 50 miles.
Bigger moves.
So people are definitely moving further on an average. And again, no surprise based on the work from home and everything that's going on there. I hear people, and it drives me nuts, but real estate experts talk about the real estate market and they say, oh yeah, the average person stays in their home for 7 years. And I'm like, that hasn't been that way for years.
Yeah.
Right?
They're quoting really old statistics.
Yeah. It's like from, all the way up until about 2009, it was around 6 years was the average time at home. But after 2009 and everything that happened, it's been up, and
like
now
9-10 years.
Yeah, 10 years on average, people are staying in their home. People are definitely staying in their homes longer than in years past, for sure. So that was an interesting stat for sure.
I like this one. Buyers are diversifying where they pull together the down payment for a home. So when you look at it, given the home prices, buyers are oftentimes, getting funds to buy and get a down payment and relying on family funds, 401ks, selling things, gift, a loan, stock, bonds. And so we're seeing more family support for people because, we talk about this. You don't have to have a ton of money down to buy a house. Some of the programs that are out there, it's as little as $500 out of pocket, right? Of your own money. And so a lot of times people are recognizing that wealth building in the family is very important and helping somebody get into that first home
especially generationally. I mean, that's a big deal. You know, we've
generationally.
talked about that many times, and this whole idea of generational wealth, and most generational wealth is created from real estate
Right.
over the years. And so, um, um, you know, that's, I don't know, getting to the whole legacy of redlining, but really that whole legacy of redlining is brutal when it comes to that whole generational wealth. One thing I wanted to point out on this survey, Tracy, is the down payment sources for first time home buyer. 22% used a gift from friends or family as part of their down payment source. And I think people forget about that, you know, you can take a gift from a family member, you know,
Or
to
friend.
or friend.
Depends on the loan.
Has to be a true gift. It can't be a, you know, kind of side hustle like loan deal, right? No, it has to be a true gift. But it is a way to help people get into that first home for sure. So yeah, really interesting. You know, there's tons and tons of data on this report, and I poured through it the other day, and those were some of the big things that really jumped out to me, Tracy.
Yeah.
And anyway, go ahead.
Well, I was going to say the last one we don't really
Oh,
talk about much, but most first-time buyers and all buyers want help and the expertise of a real estate
yeah,
agent. So,
yeah.
you know, I can't imagine Tego not getting expertise of a realtor, but I'm in the business. I just know how complicated
Oh
and
my
all the
gosh,
forms
I
and all
know.
the legalities and the inspections and things. So anyway,
Yeah,
good
yeah.
topic.
Mm.
Very good information.
No, it's pretty interesting.
Let's talk about seller financing.
Yeah.
Why would someone who owns a home consider selling their home and doing owner financing, meaning they finance the buyer to buy their home just like a bank would?
Yeah. So mainly it's cash flow, it's income, right? So you know, if you own a property and you're going to sell it, and you don't need to get those proceeds out of it to purchase your next home or do something else with it. You're just going to put it in the bank and you know, collect interest on it. Well, you can sell your property with seller finance and collect really high interest. Basically, you become the mortgage company. You become the bank, if you will, and you can earn. And it depends. Like, all this stuff is negotiable. So anything I'm saying is just, you know, take it for what it's worth. But in general, which is nothing,
In
right?
general,
In general, real estate contracts, we see rates
typically,
2%, 1%, 3% over whatever the kind of going mortgage rates is. And the reason is, somebody that's buying on a real estate contract generally has a reason that they can't qualify through the traditional channels, right?
and sometimes it's very much because they're self-employed or they haven't been in their job long enough
Yeah.
to be able to qualify for a regular mortgage. And so, Tego, what you said is so important. So if the interest rates right now are
Wait, say that again.
yeah, you're so smart.
Yeah.
If the interest rates right now are 6.62%, right?
Yeah.
Then if let's say we're going to get percent interest if I sell my house and I become the finance person for that buyer. And I'm going to say, well, I'll take 8% interest. Where else could I take that money I get out of the house and get 8% interest,
Right.
right? So
Right.
for a lot of people, it makes great sense
On top of that, it's 100% secured
by the
against
property.
by the property, right? And
Eh,
so you know, there's so many variables in there. So you really do need somebody that understands how they work, because you know, there could be a down payment, there could be, you know, just a lot of different things, a lot of different variables, the way you amortize it.
when
You
it's due and
Yeah,
payable.
you could put a balloon payment on it in 3 years, 5 years, 10 years, whatever, however you want to
It
structure it,
just
right?
depends on the buyer's needs. Like sometimes, like a job change, if they haven't been in that career for long enough,
Mhm.
it might be that within 2 years they can finance the house and pay you off in full, but it gives you an option of selling your property. But you can also think of it as mailbox money, right?
Yeah.
I mean, do a 10-year, whatever, and you know that every month you get that money.
Yeah.
It's pretty cool. One thing to be real clear on though is we always suggest you have a third party escrow company in
Oh,
there
for
when you
sure.
do this. So that's what Tigo's saying. It's, you know, you don't want to just do it. We want to make sure it's all structured right, and that there's a third party there. So the buyer pays the third party, who makes sure that if you've got an underlying payment for taxes or insurance or anything, that gets paid, and then you get the residuals, so that both parties are safe in the payment, that the seller isn't just collecting it and not giving credit to the buyer. But I mean, title changes hands. It's a real sale. It's just
Yeah.
like the bank. So
Well, I'm reluctant to go here, but there's some potential opportunities for people that have a home right now that want to sell in the next, let's say, year or so. Um, and I'll just say this: mortgage arbitrage, and call me and I'll explain what I'm talking about.
okay.
Because I don't want to go too deep on that, because there's some legal challenges that you have to deal with. So I don't want to recommend anything without somebody understanding what they're getting into. Yeah, you know what I'm talking about.
I do.
But I don't want to.
I wouldn't either.
Yeah.
So
Yeah.
homeowners balance sheets
Yeah.
topic.
Yes. So still seeing and even hearing uh, professionals in this industry talking about the flood of foreclosures and short sales that are coming, and I'm like, going, where does this stuff come from? Where do these stories come from? It's that whole kind of urban legend thing where people just something starts and people just repeat it without actually knowing the facts. And so I did a little post on my Facebook page the other day, and just talking about the number of foreclosures and the balance sheet of homeowners right now. And what happened was Black Knight, which has really, really good data on mortgages. In fact, they're the underlying software for much of the mortgage servicing in the country. So they know exactly, who's paying, when they paid, what their balance is, if they've what their equity is. I mean, they've got amazing data, and they just put out their most recent report looking at where we are, and homeowners debt is really high. The however part is that homeowners equity is at an all-time high, and so people have amazing balance sheets that are homeowners. I mean, we think about people that purchased a home, let's say prior to 2 years ago, and we've seen this like 30-40% price appreciation over the last couple of years. It is again, it's like all-time high balance sheets for homeowners. Very, very strong.
So said a different way, people owe a lot less on their homes than they're worth.
Right.
So why would they go to foreclosure if they came into a sudden hardship and they couldn't pay their monthly mortgage, right? They have so much equity there that they can sell the house. They don't need to go upside down on their house.
Very, very. I'm sorry, I interrupted.
I would say we think about cars and how as soon as you buy it, if you put a loan on it, you're upside down on it, right? And until you've paid it off, you're basically upside down on that car, right?
Yeah.
But a house continues in value, unlike a car, and typically over time.
Yeah.
And you've got all that equity, so people don't need to let their house go to foreclosure. So we don't see it. Black Knight doesn't see it.
Yeah, no, the delinquency rate is at an all-time low. The national delinquency rate is 2.7%. So that's 2.7% of all mortgages in the country are delinquent. That doesn't mean even foreclosure, right? That just means they're behind on their mortgage.
How many years has it been since it's been that low?
It's never been that low.
There we go.
Ever. I mean, at least back to the data we have, to give an idea.
Back to 2000.
Yeah, to give an idea, if we go back to 2000 and let's say 2007, 8, when the market really started to take a hit, it was about 6% of people. And the problem there, not only were they delinquent, they were upside down on their mortgage, right? We don't have that. This is very different than 2008. And I keep hearing people say, oh, it's going to be 2008 all over again because prices went up 40% in 2 years.
We need to wrap our Saturday morning. I think that the takeaway from that is don't believe that there's a bunch of foreclosures about to hit the market. And if you're waiting for everything to tank, you might be waiting a while, So if you're waiting for big price drops, we don't see that happening. We could talk forever about houses and stats and stories.
We kind of got off on that tangent. And if you're really interested in what's happening from a data standpoint in the Albuquerque area, I put stuff on my Facebook page and on Twitter,
on
YouTube, and it's Tego Venturi, Tego. You can find me on Facebook, and it's we're the Venturi Realty Group with Keller Williams Realty.
Thank you for joining us again on this Saturday morning.
Yeah. And how do people get a hold of us, Tracy?
Sure, 448-8888 or welcomehome.abq.com, or drop in on our office sometime. We're in the North Valley.
Alameda and Rio Grande. Yep, just right in the heart of the North Valley. I always joke, I was like, it's like right in the center of Metro Albuquerque, kind of.
Yep. So, all right. Thanks, everybody.
Thanks, everybody.